Demand for artificial intelligence services has skyrocketed over last year, prompting countless tech companies to pivot their business toward the budding sector. The AI market is projecting to grow at a compound annual rate of 37% until at least 2030, which would see it hit a value close of $2 trillion. AI will likely boost countless industries as technology is applied to sectors like consumer tech, cloud computing, autonomous vehicle, machine learning and more. Many brands have jumped into this thriving market, and the two main factors of PC processor that we know of, AMD and Intel, could shape their future thanks to the AI. In recent years, Intel has seemed increasingly in difficulty. First, the birth of AMD with Ryzen and Threadripper processors eroded market shares. Then, the abandonment of Apple caused the Santa Clara giant to falter, and this also had a repercussion on its shares, whose value will be around 35% in 4 years. But now, Intel has started to fight back. Firstly, Intel announced a fundamental change, adopting an in-house foundry model that will save it $10 billion by 2025. And then he decided to focus heavily on the artificial intelligence sector. Although it is behind its main rival, primarily NVIDIA, it intends to do everything possible to catch up. Last December, the company launched a range of AI chips, including Gaudi 3, a graphics processor unit, or GPU, designed to challenge similar offering from market leader NVIDIA. Intel also introduced new core processor and Xeon server chips, which include neural processing unit to run artificial intelligence programs more efficiently. Intel is therefore on a promising path that could pay off significantly in long term, and earning per share estimate support its significant potential. Intel, in fact, could reach earning of $3 per share in next 2 fiscal years. Multiplying that figure by the company for price to earning ratio of 31 gives a stock price of $91. This would mean a 112% increase from its current position by the fiscal year of 2026. And if we take Intel, we also want to invest in AMD, albeit with a guilty delay. AMD is also progressively shifting its interest to artificial intelligence. Last December, AMD presented its new MI300X AI GPU to compete directly with NVIDIA, and has already signed supply contracts with Microsoft and Meta platforms. In addition to AI chips, AMD is diversifying its market position by expanding into AI-powered PCs. According to the research firm IDC, the integration of artificial intelligence will be a driving force for PC sales, which will return to grow after years of a constant decline, and the 60% of all PC shipped in 2027 are expected to be AI enabled. If you analyze the result of the fourth quarter of 2023, revenue increased by 10% year on year, driven by AI-focused data center segment, which marked a revenue growth of 38%. AMD earnings are expected to hit $7 per share over the next 2 fiscal years. If that were to occur, multiplying this figure by AMD forward price to earning ratio of 49 gives a stock price of $345, which would mean AMD shares would rise 92% by fiscal year 2026. And with this fact, don't forget to like, share and subscribe. Huge thanks for watching. See you again next one.